Welcome back. Well, folks, today is going to be very, very interesting. We don't believe we're at that point yet where we're going to have an inflection, but we do believe that whatever happens, it's going to make headlines. And that is because today is another one of those once a month inflation or CPI, Consumer Price Index updates. I do want to talk about, before we get started, why or what happens rather when the Bureau of Labor Statistics releases an update suggesting, because I've seen quite a few comments on this, releases an update saying that the next labor or CPI report will be using the same weights from 2019 to 2020 as we used in 2020 rather, which are from 2019. This has created a lot of confusion, and a lot of folks are wondering if the Bureau of Labor Statistics, again with CPI, is trying to kind of skew the numbers and sort of rig the system again. The weights in CPI, when we do the CPI read, they are how much each individual sector weighs on overall inflation. So, for example, the weights refer to housing being 1/3 of the inflation read or the CPI read. So, if you see comments on, oh my gosh, they're using weights from 2019. They're trying to make inflation seem like it's less than it is, or whatever. All they're saying is they didn't see that the changes that occurred during the pandemic merited any form of a change in weighting of how things are calculated. So it's actually, if anything, more constant rather than less constant. But I have seen a lot of people quoting this sort of this update. And being a little sussed out that, oh no, here goes the the Bureau of Labor Statistics again, off on the trying to rig the game again. For example, right now, you jump on over here. This is the Bureau of Labor Statistics CPI price page. And you'll see that right here. Starting in Jan 2022, weights for the CPI will be calculated based on consumer expense data from 2019 to 2020. And again, people read that and they're like, "Oh my gosh, we're using data. We're using old data to try to rig the system." Right? No. Chill out. Well, sometimes there are some things where I'm like, yeah, that's a little sus. This is not one of them. So I do want to point this out right here because this has led to a lot of confusion, and it's honestly not that big of a deal. If anything, it's better that it's more constant than less. Now, in November, we had a 0.8% month-over-month rise in the CPI read. And that was a 12-month 6.8% read. Now, in the next 60 seconds, we are expecting new CPI numbers, which is always really exciting to get and find out what that headline number is going to be. Now, what numbers are we expecting? And what do we think is going to happen? Well, first, the market is expecting a 7% year-over-year read. That is more than what we had reported last month. These are the December numbers. Again, we're expecting a 7% year-over-year read and a month-over-month of 0.4. I think if either of these miss decently, like we get something under 6.7%, or we get something that's maybe under or equal to 0.2% on month to month, I think we're going to be in a very nice position for the stock market. I think the stock market has really priced in some nastiness already in terms of both rate increases, the balance sheet runoff, and inflation. As a result, indices are actually up. 0.2 on the Dow, 0.22 Dow, 0.2 on S&P futures, and 0.33 on the NASDAQ futures. And let's see what it is. Here we go. Here we come. Come on. We're waiting for hopefully under 0.4. Still not out. Come on. Get the freaking feedback out of here. Come on. Waiting for that number. Any second now, this will actually update. And waiting for it to update. This will say December. Come on. I'm excited for it. Let's CNBC have it.
Squawk Box. Rick Santelli here with The first,
there it is, 0.5. Okay, 0.5 and 7. It's on the dot. It's basically a match, slightly higher on that month over month. This is basically a match, folks. This is not like a big rally mode kind of green. This is basically matching expectations exactly. It sometimes makes me feel like all this stuff is rigged when the market all of a sudden says, we think it's going to be 7.1%. And then the day before the report comes out, the market's like, no, we actually think it's going to be 7% instead of 7.1%. And then it's literally 7%. Freaking nailed it. Like, and it's like, what? Okay, somebody knew something. A little weird, but let's take a look at some of the, obviously, these are the month over month increases, which they're showing on a nice chart here. So we're seeing kind of this potential slowdown here in this inflection or in inflation. One of the things to remember, and this in my opinion is very, very important, is this run up we saw right here. Well, a lot of this right here was based on and these are month over month figures, right? A lot of this was based on coming out of the COVID winter, the first COVID winter. Inflation really subsided in the summer, but when Delta ravaged us in September, we actually had the skyrocketing of actual price input or prices. And so October, November really got hit hard. So it's nice to see that even though it's not 0.4, 0.5, not bad. This is not bad. I'll take that. And again, we were not expecting this to be the month where we get a big inflection point to the downside. So this is not a big surprise. Food in the index is up about 6.3% on the unadjusted 12-month. Energy, folks, look at energy on the 12-month, 29.3%. Absolutely mad. And energy really, really up there. On the 12-month, you've got new and used vehicles up 37.3%. Just nuts. But in December, folks, used vehicles only up 3.5%. And new vehicles up 1%. Let's see if we've got any larger negatives. We'll go ahead and pull. Let's get a little bit more data. You can go to the bottom of this report, and you can get some nice sheets. So let's grab it here. We're gonna grab the sheets with the detailed expense categories. Okay, let's see what we have here. So these are going to be the month over month changes. Okay, so I really want to see what's changing on a month over month basis here. So this far right number is what we're going to look at. We've got food at that 0.5% level. We have biscuits down 1.7%. What is this? Beef. Oh my gosh, beef's actually going down. So beef has consistently been one of those that has come in quite high. In fact, over here, you can see the unadjusted annual number here. And look at this for beef. You're up between 18 to 22%. You have finally had an inflection point here in some of the beef prices coming down 2 to 4% piece on a month over month basis. So quick drawdown there. But folks, oranges up 8.9% on a month over month basis here. Tomatoes down 4.6. Okay, we're going to get off of some of these narrow categories. Sometimes it's interesting to see. Food at schools. Food at employee sites and schools down substantially, 7.9 to 12% on the month over month basis. Wow. Energy. Oh my gosh. Look at this, folks. Even though that annual inflation read for energy was very, very high at 29+%. Look at this, folks. Energy actually inflecting down. Fuel down 3.4%. Again, annually up 38%, but fuel actually inflecting down, coming off those peaks. This is good. We want to see more and more of this stuff not hitting new peaks. We want to see this stuff draw down. Floor coverings down 2% here. However, living room, kitchen, and dining room furniture up 3.1%. Laundry equipment, so still durables. We're still seeing price increases on durables. Again, laundry machines also being severely affected by supply chain issues. Women's suits, though, up 3.4%. You've got watches and jewelry up 4%. Used cars, we are not getting over this used car pricing. 37% on the year, 3.5% just in the month over month comparison. So hopefully when we get out of this whole Black Friday, end of the year sales event, bull crap and all that, maybe now we can start seeing some of these prices for used cars inflect down. Domestic services. Okay, services can have a big drag on inflation or a big sort of boost, create a big boost to inflation. 2.4% on a month-over-month basis on domestic services. Let's see here. Moving and storage, 1.1%. That's probably entirely because of California. It causing inflation in the moving and storage sector. So sorry about that. Then you've got minus 2% for care of elderly. Look at this. Oh, wow. Wow. This is really good. This is actually incredible. Look at this one here, folks. Car and truck rental up 36% over the year. But wait a minute, folks. Look at this. 5.3% to the downside. Now, this could potentially be, and you never know, but some say that, well, December is just a freaking slow month for moving and getting a U-Haul, okay? So who knows? We'll see if that lasts for next month going into Jan. And that's it. That's actually not that terrible. I'm surprised. Let's see. Rent of shelter only listed at up 4.1% for the year. This is a very lagging indicator. It makes up about a third of the CPI read, up 0.4% on the month over month. I mean, really, there's nothing here that's screaming scary. When the biggest things are things like women's suits or appliances or oranges on the month over month basis, living room furniture, which could really be Omicron related. Again, we remember, folks, how when you look at these categories, it's like, okay, why would furniture be up? Well, come on. We just had hundreds of companies, massive companies, say that's it. We are doing work from home again because we're tired of this Omicron crap, right? So we're doing work from home again. So you work from home. Okay, furniture goes up. Gee, what a surprise. Whatever. Was gotta get these used car prices down. We did in the latest Manheim Index report start seeing some softness in these prices, which is nice. I do want to see what the suits are saying, and then we'll look at how the market's reacting. It appears so far the market is reacting positively, which is an expectation, because really what we wanted was not a dirty miss on numbers today, or I beat. Even the same beat sounds weird. Like a number that comes in substantially higher, right? That would be scary. So let's take a look and see. SPY, BTC. Look at this, folks. The market's happy about this. Market is happy about expectations being met. Not fearful about that 0.1% beat on the month over month. Market don't give an F about that. It's like, you know what? Look, we are expecting the high number. We got the high number. We didn't get that inflection on the downside yet. But again, probably not seeing that until March, April, May, when we compare to a little bit of a faster slope of growth from last year. This is leading the S&P 500 to move up. We're up about 0.5%. Right before the CPI read, we were up about 0.2%. If we go to BTC, we have a little bit of hold on. Let's see. We're on 4 hour. Let's go to the minute. There we go. Oh, look at that. We're almost at 44,000 on BTC. Notice it is moving essentially in direct correlation with tech assets again. Look at this, folks. This is your tech index, the NASDAQ. This was up about 0.4 or 0.5 before. It's up about 0.76 right now. It does look like you've got some of the larger megas up. What's going down right now is actually Darden, Olive Garden, for example, down 8.3%. You do have Corsair down 1.3, Toast down 0.91. So restaurants rotating down here. But moving to the upside, Ocugen 12%, Hippo Insurance 6%. My gosh, that one's gone to the toilet. Hut 8 Mining 3.8%, Matterport 3.29, SoFi, Xpeng, and so on. No real blast offs in some of these individuals here. You have Tesla up 1.25%. Let's take a look here at Tesla's chart just to see its reaction. Oh, Tesla loves this, folks. Tesla went from 1066 to about 1080 right now. So very nice move over here at Tesla. Tyson Food doesn't really care. And how about ARK? Does look like we're broadly green on the market right now. ARC also moving up with the indices here. So let's take a look at what the suits are saying about this. Okay, let's see here. So, oh man. Okay, well, meet expectations. Treasuries, take those CPI prints in stride. Pretty strong CPI numbers, especially month over month, coming in slightly higher, say the suits. But markets aren't exactly on fire. The key to the longer term will not be so much what's now in the rear view mirror, but what's to come. 5-year break-even rates are still hovering near the 3% region, meaning with even with all of Powell's promises to fight inflation, traders are skeptical. In a normal world, this would send this sort of CPI print would send yields sharply higher, but long-dated premiums are still negative. The break-even calcs. Let's see here. We have. Let's look at the bonds themselves. Yeah. Oh my gosh! Look at this, folks. This is incredible. The bond market actually rotating down. See, you even have the CNBC headline here saying the 10 years at 1.74. Folks, it's falling. It's down. This is so unexpected. With such a high print, you would expect that bonds would run. Remember, they ran up to 1.8% on Monday when we had a dirty morning on Monday, and the stock market was extremely pained. I mean, just because I was getting asked so many questions, we did a deep dive in the course member live streams on hedging. Now, I didn't hedge. I bought the dip. Which I'm happy about because the dip that we bought on Monday is way up right now. But just more the reason, if you are not yet part of the Stocks and Psychology of Money group, I don't know what you're waiting for. Consider joining. Use that coupon code down below. It's a birthday coupon code. Prices will be going up after my birthday. And also check out the Path course that comes out in about 2 weeks. I'm excited. Probably 16-ish days. So anyway, this is actually a very unexpected movement here in the bond market. And remember, folks, the bond market can yields can rise, and this is very, very common when folks hedge a dirty inflation report. So picture how that would work for a moment, okay? So you think, oh no, inflation's going to the moon, things are getting worse. Well, if inflation goes to the moon, we would expect the 10-year probably to also go to the moon, right? And that would work potentially by bonds falling. So bond prices fall, bond yields go up. So if you think bond prices are going to fall because inflation is going to come in really dirty, then you could actually short the bond market. If you short the bond market, then you're expecting prices to fall. Well, apparently the market was expecting prices to fall so much that when we got this report that didn't beat expectations, just meet expectations, all of a sudden people were like, oh, okay, well, maybe we don't need to short bonds anymore. Let's get rid of our hedge. Maybe let's buy back some of the bonds that we sold. And we're actually seeing the 10-year yield fall right now pretty decently. I mean, it's a, here, I'll show you exactly what it looks like. And now this is a little, I think this is about 10 minutes delayed, but you could kind of see the reaction when I just pull up this little segment right here. This is right here was when the print came out. It first overreacted slightly on that beat on the month over month, but then the market's like, nah, this is not hyperinflation. And I bet you I'm going to get some comments where people are like, 7% is not hyperinflation, and what is? You know he's going to get that kind of like weenie baby hate. But look, I think at this point we realize prices have gone up to higher levels. Year-over-year numbers are high. They are elevated. We had a level of inflation. The big concern for markets is it going to recur? That is the most important thing. Is inflation just going to continue to recur to the upside? And the expectation appears to be no. And that's been what the market has been overall pricing in. So let's take a look here. It does look like rally mode is somewhat continuing. ARC at 88.3 here. Also, that's up about 1.5%. SoFi about 3-ish. You've got EXPI at 2.67, Affirm 2.42, Enphase up 2.39, Cloudflare, Lemonade 2%. Not like massive numbers here. It's not like the market's like, oh my gosh, definitely turn on rally mode. which I think we could have had if we got a collapse in the inflation rate. Not there yet, though. Instead, oh, folks, let me ask you, okay, what do you think the Senate Republicans just tweeted? Senate Republicans, if you know your politics, you know what the Senate Republicans are tweeting. Okay, remember who's president, so it's not going to be positive. All right, Senate Republicans just tweeted. Here it is. New data. Inflation in 2021 was the worst in 40 years. This is very, very expected. I wonder if Dems have tweeted it. But these are the sort of headlines that you're going to see in the political world. How does Senate Democrats and Senate Republicans have exactly the same number of followers, 1.2 million? No, Democrats just ain't saying anything. Oh, silence. Anyway, okay, let's take a look here. We got Tesla somewhat softening a little bit here. S&P softening as well. A little, again, this wasn't the kind of report, in my opinion, where I'm like, that's it, we're going into rally mode. I wrote that down. I wrote down the bet that I made that we would see a rally if we got a less than or equal to 0.2 on the month over month and a 0.67 on the year over year. That was rally if. I don't necessarily think we deserve. I mean, maybe we deserve, but I don't think necessarily we've earned a rally. So that's a no-go for me. So I'm not necessarily jumping and going shopping. Oh, look at that interesting drawdown there on the S&P 500. I don't know. Oh, okay, that looked like a Weeble glitch there. But it's okay. So some of the excitement kind of dying down a little bit. Enphase still doing nicely here, sitting at about, what is this, 150, 190? Anyway. Yeah, okay, good. Let me see what else El Sutsos are saying. So let's see here. All right. Inflation, a little high, but may already be priced in. Inflation was a tick higher than expected on a monthly basis, with the headline rising 0.5 and the core rising 0.6, with expectations at 0.4. Despite this, the headline came out largely in line on a year-over-year basis at 7%. By this point, you already know that it's the highest read in decades. See, I actually like that they wrote that. They're like, at this point, you already know. Like we're doing the 40-year number stuff. Like, do we really have to still have a conversation about it? It's like we got the clickbait headline. We got it. Okay, 7% at the lot. It would probably be front and center on like New York Times and stuff like that. We'll look in a sec. That's likely a function of the lack of reaction from fixed income bonds, which arguably priced a higher number in during last week's drama in the bond market. So yeah, we'll see how we'll see how the dust settles. Ooh, not always straight up, but I will say the bond yields dropping is very, very good. Yeah, that's it. Okay, let's take a look again. Bond yields, just to see if they're continuing or rebounding back a little bit. Stock market pulled a little bit back from some of its excitement. Nope, bond yield still sitting at that 1.72 on the 10. Let's look at the 2-year. If the 2-year rotated down as well, it did. Not much. We're still knocking on the door of that 0.9 number here. But no, bond market certainly not like, oh my gosh, hyperinflation. The bond market is not saying that. And the bond market is people actually putting their money where their mouth is, right? So what do y'all think Kevin McCarthy just said? Kevin McCarthy, breaking. Inflation just hit 7%, the highest rate since 1982. The trend isn't transitory. Look, they put a picture of sad Joe Biden. Welcome to politics, folks. Even like, yeah, consumer prices rise 7%, fastest pace since 1982. Wall Street Journal, U.S. inflation reached fastest pace since 1982. Who cares? We got it. But yeah, this is the headline everybody's interested in. Inflation registers biggest annual gain since 82. My goodness. Okay, folks. Sell your clickbait. Gee whiz. All right. So All right. Well, that was the inflation read. Now I think the key here is going to be trying to dig around and see what's actually trying to hold on to gains today relative to what came out CPI minute. So a firm Matterport, each having a little bit of a rotation back down. Let's try Baba and Neo. Let's see how that Chinese sector's doing. It's been doing pretty well the last few days. No, Baba don't give an F. Baba's like the honey badger, just whatever, man. Baba, let's try Neo. Yeah, Neo likes this up 3.5%, but again, it's up 3.5% is really relative given that you're just sitting at 30. See, Tesla ran up to almost 1080, but pulled right back down. Not all the way back to pre CPI pricing here, but yeah, relatively stable. It's probably going to mean that BTC has stopped its run. Yeah, it kind of did. Yeah, look at that. Rejected at 44 again. You know what's funny is I was stupidly looking at some of the comments yesterday. Oh, the temperature's perfect right now. And some people are like, "Oh, Kevin, you're just like so happy that the stuff bounces right at your lines like lemonade bouncing." Ugh. Well, if you draw enough lines, some of them are bound to hit. And it's like, man, anyone who actually watches these live streams regularly knows that these lines work pretty damn freaking well on so many different stocks. It's really incredible. We'll see. We'll see, and I think they give us really good indicators because I want to show you, and we've talked about this before. We were talking about this quite a bit in the live stream, in the course member live stream as well, because a lot of folks are like, "Hey, Kevin, like, when are you getting in on the small cap rally?" And well, we've talked about this in detail in the course member lives, but and briefly here. But my rule has been waiting for a complete breakout of this channel. And Shift Technologies was a really good sort of canary in the coal mine for actually not getting in on the small cap rally yet, because we were last here and here when we had small caps moving, but we never actually got a bar break. We didn't even get a half breakout on the bar. Like the bar just stopped at the resistance line, and these lines were drawn before these events. We could not break these numbers. And so it's no surprise that now we're dancing along the lower side of these. So this was a very easy to tell to me that the small cap rally is not ready yet. It will come. Don't get me wrong. It will come. Volume is elevated. People are paying attention to these small caps. But right now we're still hitting new lows. And what I really need to see is a full break above these, maybe even one or two. And we see one or two full breaks above some of the TA that we've drawn here. That's where I think we begin to finally set up for the good old school doubles and triples that some of these small caps could really be setting up for right now. I mean, even SoFi sitting under some of these levels here, quite powerful, in my opinion, in terms of being able to go buy the dip. So, okay, take another look here. BTC on the min chart. We're going to retest here. We're going to retest that 44 level right now on BTC. Matterport on the 1 min, trying to go pause again here. Really trying to keep the excitement going. S&P doesn't care so much. Looks like it's going to play flat. Go over here on Tesla. 1 point. There we go. Look at Tesla. Tesla's moving up again. Now breaking at about 1081. So very nice. The thing about Tesla that has been very interesting is, apparently the open interest on options ending January has really been running in 9 days. I have not been tracking it, so I don't know the relative open interest. But if I go to approximately where the money is right here, see if there we go. Okay, open interest loading. Look at this, folks. 22,000 contracts for the 21st at 1100. So a lot of interest there on Tesla maybe getting to that 1100 level. Next level here that's pretty popular seems to be 1050 on Tesla. That's interesting. 23,000. You've almost got as many at 11 now. You've got as many at 1100 as you do 1,000. Jeez. Okay. So let's see if the suits have mentioned anything else. Let's give, in the meantime, CNBC a brief listen here. What do we got over here?
And then $8.50. A year from now, that's the number that's going to unfold. The stock is going higher. Textron makes both commercial aviation. It sells Bell helicopters. It makes private components. And I think Scott runs a great job there. $225 million. Then there's a little tiny company in Connecticut called Kaman, Kaman, with a new CEO. He's doing a much better job of allocating capital. That stock's 43, and I think you got a 50% in a year and a half.
All right. So, yeah, I mean, market mostly doesn't have anything to say here. It really seems like, I mean, I suppose it makes sense. Okay, here's one of the things that's being talked about now is that this really solidifies the case. It's kind of like the nail in the coffin for the Fed raising rates in what's it called, March. Not in January, because we're still going to be tapering in January. If we had some sort of freak out of an inflation report, and this is why you might see more green today in the market, if we had some kind of freak out in the market today, in terms of, well, if inflation came in really high, then the market would have freaked out. If we had that, then it's always possible the Federal Reserve could have raised rates sooner, right? The Federal Reserve is not bound to raising rates only during meetings. They could have emergency sessions and just say, that's it. Inflation's out of control. We can raise it dramatically today. They're not really saying that. They're making it clear that inflation is important, but they're not freaking out to the point where they're having emergency sessions and raising rates. They did write a terribly bearish or had a terribly bearish meeting last month, but really just on the course that we've been familiar with now. So let's see here. U.S. Consumer price data for December. The drumbeat of Republican criticism has begun. Yep, no kidding. That is what we saw as well. Dining out was more expensive. The index for food away from home rose 6% in 2021. All right. So, but anyway, yeah, this reiterates the Federal Reserve raising rates in March. Traders find reasons to stay calm after CPI print. Yep. All right. So suits appear decently happy here, looking for opportunities. You know what? Something that's very, very interesting is how many stocks broke their floors. Remember the floors that we always used to talk about? Look at this. Lemonade. Lemonade, the floor was 40. Okay, it's at 39 right now, and it went all the way down to 34 just a couple days ago. DocuSign, the floor was 140, and it went down to 126 on Monday. Remember how bloody freaking Monday was? Oh, there was so much fear on Monday. SoFi had a floor of 14. Freaking thing went down to $12.18 on Monday. Or sorry, $12.82 on Monday. Broke the floor. So many things broke the floor. And that was really a sign of over bearishness. Beyond Meat went to 58 that day from its floor of 62 to 65. Cloudflare, listen to this one. Cloudflare had a floor of 129. Look at what it did, folks. It went down to 100. That shows you where the excess pain is. And in my opinion, if you're looking to buy the dip, if you could still buy stuff that's under the floor, this may be not a horrible idea. Cloudflare still being under the floor. So is Enphase. Enphase had a brief floor at 180. See, the floor was really here. What we did is we took the December numbers and identified a floor in the pain that we saw in December, and of course something that would correspond from prior months as well on the day chart. And we just broke right through those floors, and that was a very, very bearish signal. Same thing for Robinhood. You know, that these prices are still dirt cheap, folks. Robinhood had an $18 floor. It's at $16.41 now, went down to $14.75. So almost all of these that had floors have substantially broken them. Very, very, very bearish. And in my opinion, that sets us up for some very good optimism going forward. So this is Matterport at 1639, 1640-ish. It had a floor of 21 to 22. Peloton never really found its floor, but Peloton's another one that just kept going down at 31. We were initially trying to track it around that $40 range. Carnival Cruise Lines is above the floor. It's one of those that really recovered. Now, this gives you an example of why those floor numbers are so good, because if you look at Carnival here, we broke that floor of 1780, which I actually don't have lined here, but 1780 was a brief floor that we had. We broke that here, went down to 1632 and some other pain over here in the middle of December. Those were really buy times. So the floors, in my opinion, are great opportunities to respect for buy ops. Look at PayPal here. PayPal had a floor of 180, sitting at about 187 right now. Affirm had a floor of 92 after that Consumer Financial Protection Bureau letter. And drama here, you are down to $81. Woo! Toast had a floor of 30. It's basically sitting at 30 now. Went down to 25.95. ARC G had a floor of 58. Things at 55 went as low as 51.69. A couple more of these. DraftKings here. DraftKings had a floor of 26. It's at 26.94 right now. And Zoom had a floor of 175 and went down to 164. Right now, look at that. It's back at floor. So when you're seeing some of these floor prices get broken, I really think you've got you've got a beautiful opportunity to go shopping. And I know people think that's maddening. Some do. Mostly the Bears. The Bears are really loud in the comment section on red days like Monday, and they're really the haters. A lot of them, they're like, at least the Bulls aren't mean. Yeah. But let's take a look at I really want to watch that 10-year, because that 10-year is everything today. Okay, 2-year 85 or 89.5. It's kind of ticked up slightly again there. 10. That's on the 2-year. 10-year actually rotated down again. Look at that. Now down to 1.713. We started at about 1.75 this morning, and again rotating down here on the 10-year. So this is very good for the indices. You'll see NASDAQ Futures Technology is doing the best here, up 0.7. Dow and S&P each up over a quarter here, 0.29, 0.39 respectively. And let's see if BTC ended up breaking as 44K. We were really testing it. Nope. Again, could not break that 44K. So this is setting up for our next really frontier here. And it's going to take tech stocks rallying here. Remember that Bitcoin has not become or proven to be a very good inflation hedge despite expectation. Oh, listen to this. Domino's CEO, we don't see inflation slowing down. Let's see what he's complaining about.
All right, so that's not used cars. That's the fear of this getting more entrenched.
Right. I mean, this is it. This is the real.
Well, I guess we missed what the commentary was, but we saw it there. Let me see if I can just find it, though. Yeah, I see it. Here we go. Hold on a sec. Let's listen into this for a moment. This could be interesting. Let's see what they're saying. And it's Sarah.
Hard, David. They'll figure out a way to keep the margin.
Wrong one. Hold on.
In the food basket 2022 relative to 2021, and we also see continued wage inflation across the marketplace as well as we look forward this year.
So how are you dealing with that, especially for a Domino's, which is so known for the promos and the deals that make it so appealing for people to get delivery and take out? What you add to the $7.99, for instance, takeout package, I know with the wings. How do you adjust for something like inflation with those rising costs?
Yeah, well, as a starting point, Sarah, we come into this with very strong unit level economics across our business, built on.
I was just thinking to myself, what? I should have said it. You know what I was thinking to myself? This guy's going to come on here. As soon as I saw the plaid suit, and I don't know why, but I saw the plaid suit, and I'm like, this guy's going to sell us the narrative of, guess what words? or guess what, folks? Pricing power. Why? Look at the stock. The stock has recently been falling. You could see it there on the right side. See how it's dropping? So you go on CNBC, you take the tie off, and you put on the plaid suit because you know what? It's time to make sure the markets know we have pricing power. We're going to raise prices and consumers are going to keep paying them, and we're going to keep our margins strong because inflation ain't going anywhere. That's kind of how I'm feeling, and that's roughly what he's saying right here, right now.
The fantastic work that our franchisees and operators do each and every day. So while these cost increases are certainly tough to absorb, we come from a great starting point with terrific economics. And then as we think about how we manage through it, there's a couple of different levers that we have to pull. Certainly pricing, on the top line, and we are taking some pricing actions, this year relative to our national offers and our franchisees at the
See, how are we going to deal with this? Oh, well, we're coming from a great place of economics. We're going to certainly adjust the top line pricing. Come on, folks. He's selling the stock. He's not going on CNBC to educate you about inflation. He's going on CNBC to sell you on Domino's stock. Look, because this is what it's been doing. It went from 567 down to 482 here, and just literally this year. The last week has been bad. And he's probably, his handlers are probably like, we got to get this guy on CNBC. Oh my gosh, it's funny, but I think, and this is something to know because a lot of people forget this. When a lot of people listen to earnings calls and they get so excited about the earnings calls because they listen to the CEO speak, and they forget that every single earnings call is a freaking sales pitch, y'all. Another thing, gosh, we're giving away all the secrets. Another thing we talk, it's not like it's a big secret. There are plenty of other things to learn, but it's so easy to forget that. And this is one of the things we talk about in the Stocks and Psychology of Money group. Do not get enamored by earnings reports. Your job when you read earnings reports, when you read earnings transcripts, when you listen to these executives, is to look through the bull crap because they are feeding you a load of bull to try to pump the stock. Because guess what? When the stock gets juiced, the employees are happy. It's easier to do deal acquisitions. You get a bigger bonus. Come on, man. That's what everybody cares about. Stocks go up. That's what they want. Anyway, I'm done listening to the Domino's guy. Oh, he's got to make it feel like they're having we got so much work to do. Oh, yeah, look at what wait, look what it says on the right. I just noticed this. Wait a minute. That is funny. Reducing number of chicken wings offered from 10 to 8. Let's go show you that shrinkflation. That's it. 2 less chicken wings for you, and we can get away with it because we have pricing power. I'm telling you, he's not on CNBC to get you to pick up the phone and go order your chicken bowl. He's getting you to buy the stock because they've been having a rough time. Oh, what a joke. Ugh. Oh, geez. It's a mess. That's why we call it Stocks and Psychology of Money. Anyway, so then we got, let's see, Rocket Lab, 6.2. Okay, so some of the smaller caps moving here. Hippo moving up 5.62. Neo's continuing to do decently here, 4%. Alibaba knocking on the door, 4% as well. Affirm 3% to the upside. So we got some decent moves here. Roku, Lemonade, Shift Technologies, some nice moves here. Tesla 177 coming up on 2% on Tesla, not bad as well. Zooming in here on Tesla. Yep. At the highest levels we've seen so far for Tesla intra pre-market. I don't know if you could say that, but I will. The S&P is almost as high as it was after the initial euphoria of the inflation report, which I know that sounds wild to say, the initial euphoria of the inflation report. What it is it's a relief It's a relief that it's not worse than expected. Oh, here you go. I know that, like, look, a lot of people on the right side are very, very happy that we're not going to do the Build Back Better plan, at least for the time being, right? But you got to feel bad for the fact that, like, just imagine, like, put yourself in these shoes. Imagine you win the presidency, and then you barely eke out the number of seats that you need to have control in Congress for just 2 freaking years to get stuff done. And then you get Joe Manchin, who's like, no, we ain't doing anything because inflation's too high. Like, again, politics aside, whether you like that or don't like that aside, that sucks. You got to feel bad for Biden to some degree, again, whether you like him or not. It's just like, oh my gosh, it's like worst case scenario. I honestly think that's going to hurt his reelection chances substantially. And I don't necessarily think that the Joe Manchin thing is his fault. Democrats in total could have done better, right? They didn't get a bigger margin. So to some degree, you could still blame the Democratic Party for not having gotten more seats. But anyway, I bring this up because it says here, it's hard to see Joe Manchin, who's been holding up his Democratic colleagues' Build Back Better plan, changing his track based on this recent report. He has argued that surging inflation cries out for more discipline. Yeah, exactly. Yeah. Lots of let's go Brandon in the chat here. Take it out of oil subsidies. Oh my gosh, yeah, terrible. Some of these are bad. Let's see here. Don't feel bad at all. Well, I was expecting some people to say that. Okay, some of these things I can't read out loud. But anyway, do I think that midterms will help companies like Trade Desk? Yeah. Look, the political campaigns are always a big advertising play. I don't know how much of that is priced in. It depends if we're going more digital than ever before. I would always argue yes. I'm a big fan of advertising. Somebody asked me if I sold out completely of Google because I mentioned. Let me see what I have left of Google. Google. I have the spreadsheet here. Oh no, I still have about 500K left in Google. That's down from. That's probably down about. I don't really remember where it was. I think it was like 1.3 or something like that. So I sold like 700K of Google, and I used that to buy the dip on some of the other things that were on fire. And so far that's been working out quite well, actually, including Trade Desk to some degree, but those are the only thing. Remember, every single time I buy or sell something is a move that I make that I expect is going to make money in the longer term. Does not mean I'm right. Doesn't come with a guarantee, unfortunately, but the goal is to be right a lot more than wrong. And if you want every single buy sell alert every time I trade, make sure to check that out in the links down below. For the course on stocks and psychology of money. That's another thing. It's funny. Like, somebody left a comment. They're like, oh my gosh, Kevin, the person who bought Lemonade, or no, it was Peloton at $100. And then, they left this snide comment because it's like $35 or whatever it is now. And then I was really happy and I was really proud because the first reply was, yeah, and he also sold it for 120. It's like, I think that was a little generous. I think I sold for like 113 or something like that. But I did buy. I bought at like 103. I bought at 79 when the lawsuit came. And the thing ran up to 120, 124, 125. Started rotating back down. That's when I started seeing the fundamentals change. That's all of a sudden where, they dropped the price of the Peloton bikes and all the red flags started coming out in the social channels in terms of trend searches, website activity. And I completely closed out of that position profitably. And then so some people are like, oh, but how come, I didn't know. Well, we're part of the Dr. College Money Group, I guess. But anyway, you got to pay attention to the stocks. They move sometimes for reasons unrelated to the actual companies. Like, I personally think a lot of the overselling that we're seeing right now in small caps isn't because the companies aren't doing well. Like, don't get me wrong, I don't invest in Tattooed Chef, for example. I know a lot of people who watch the channel do. And I don't think it's a terrible company to invest in, but I don't believe that it's selling off from, I don't know, what is this thing at? I don't believe it's selling off from the $24 to $18 range all the way down to now $13.46 or $14.36. I don't believe this sell-off is because the company is now fundamentally doing something wrong. I think it's because it's the butt of the shorts. It's what shorts are using or hedgies are using to insulate themselves, because it's easy to do right now. Retail buyers are missing, folks. Retail is out of money. Retail's not paying attention to the small caps right now. So it makes a perfect opportunity for the hedge funds to short them, because the last thing the hedge funds want is another GameStop or AMC happening. So they go short where retail is not. Let's see. So the new course, The Path to Building Wealth, will have access to the live streams in about 2 weeks, but not the trading alerts. The trade alerts are solely based on are for the Stocks and Psychology Money Group. The Path course is really different. That's combining, real estate, stocks, education, and opportunities for career advancement, and really building your wealth, combining everything and applying it to scenarios. So that the idea is to create 32 to 64, maybe even more scenarios, and go deep on different individual scenarios. We won't name people specifically because we can't give specific financial advice for folks, but we're going to try to hit every scenario that exists out there for this. But anyway, let's do a little bit of short looking here. Let's see if we have any kind of movement or inflection point in the short interest rate. Corsair is down over the last month approximately here. Down from a high of about 32% short down to 27.5% short. So a little bit of softening there on the interest in shorting. Same thing over here at Tattooed Chef. You're down about 1.5% to 32.5 roughly. 29.68 on Shift Technologies. NKLA, Nikola Corp. Nikola has actually been running in the short interest. You've actually gone from 24 to about 26. Let's look at how Kathy's doing. Is Kathy still getting shorted? The answer is we're starting to see a decline. Folks, we're starting to see a decline in shorts. OMG. The hedges are pulling back. Yeah. Oh my gosh, look at this. 38% down to 34% on Lemonade. That's a 4% decline, just about a 12% decline in the short interest number. This is interesting. We're starting to see a little bit of a decline in some of the shorts. That's a very good setup. Now, SoFi is actually run from about 9.3 to 11.65. So SoFi is actually up. I don't give me some more tickles. Oh my gosh. Oh my gosh. I need more coffee. Give me some more tickers here and we'll look at some more. Matterport, only 8.63%. I'm surprised. Probably because of the metaverse. People are like, oh, hell no, I'm shorting something that could metaverse run. It's kind of smart. Do not short something that could run unless you got like balls of steel, like Lucid, 18%. Those shorts have been increasing. That doesn't surprise me because we know they're going to screw up on deliveries. But then again, how much is that already being priced in is the question. 1.55 on PayPal. It's like a Palantir. Yeah, just join the course for more tickles. Oh, God. No, that's the OnlyFans. Smile Direct is up at about 28%. Ooh, Affirm. Affirm never had a very high short interest rate. It's at 6.67%. It has gone up though. Vuzi, 25.75. That one's gone up. Neo's very low as well, 4.1% here. I thought we already did Tattooed. Yeah, we did 32.35. ChargePoint. Yeah. Some of these we've already done. You just rewind the video and see them. Get out of there. There we go. Charge points at 13.41%, up from about 9.3. So we definitely seen a movement. D's. Come on. You're trying to get me to look up like D's nuts. Sorry, FUV. See, now you got me screwing this up. Arcimoto 35%. Arcimoto up substantially, actually, from 31.8 to 35. That's a good one. Yeah, sometimes I know when people are screwing with me with the tickers, like when people donate and they tell me to look up this really hot new innovative company, small company operating out of a small building, but really, really innovative, up and coming, like Teradyne International, or yeah, good one, silencer. All right, I'm gonna do one more. I'm gonna stop here. Kevin sleep deprived? Nah. If this is me on 4 hours a night, then what's 5 hours a night like? All right, let's see here. What do we got on the SPY? We're done. We're done. 8-minute patent pending. There you go. Aerodyne. Whatever. It's been so long since I've watched that darn thing. Wolf of Wall Street. That was fun though. Shout out to Jordan Belfort. If you didn't know, he actually had a podcast, and I was on it. Gosh, now that's 2 years ago, two and a half years ago. Wow. Jordan Belfort. That's kind of cool. Anyway, okay, cool. So what are we doing? We got 8 minutes to go here, folks. Come on, man. Give me something to talk about here. All right, let's look at Darden. Why is Darden down 8%? Because the bread's okay. You know what drives me nuts about all you can eat? And this is just a rant while I pull up Darden. What drives me nuts about all you can eat? Like when you go to Red Robin, it's like, oh, you get all you can eat French fries, or you go to Olive Garden, it's like, oh, all you can eat breadsticks and salad. It's not all you can eat. It's absolutely not all you can eat. Why is it not all you can eat? Because you are choke pointed. You are bottlenecked. Worse than the supply chains by the servers. If the server don't come around, you ain't getting bottomless crap. All right, so what do we got here? Darden restaurants. I actually don't see any news. Restaurant, downtown eateries. No. Yeah. Just an update from a couple days ago about high labor inflation remains. Basically, the struggle of trying to find employees, and they're seeing more turnover for new hires. But they did mention that high protein prices are starting to come down. We actually saw that on the inflation report this morning, that beef prices were starting to come down substantially, and like 4% on the month over month, which is crazy. Yeah, that's interesting that Olive Garden is also picking up on that the high protein prices are coming down. That's good. That is good. Kevin starts his day like the wolf did, the opening scene. Oh man, now I got to know what the opening scene is. We got to look at bonds too, though. Oh man, come on. Wolf of Wall Street opening scene. Oh no. Oh no. I'm gonna demonetize if I play it too much of it here. What is this? Hold on.
And Queens for a month.
Okay, Mr. Jordan.
I take Quaaludes 10 to 15 times a day for my back pain, Adderall.
Okay, we are not playing more of this. Oh, that's terrible. Nah, that ain't me. Okay, so, geez. All right. Yeah. All right. So 10-year 1.718. This is pretty stable now. 2-year also rotating down a little bit. 0.891. Noah Allen says institutions are piling into Palantir. Oops. I don't know about that. Let me see here. I mean, under 17, don't get me wrong, but the volume, are we seeing like an increase in volume here? Sell volume. Nah. Oh, well. Oops. All right. So, all right, folks, 4 minutes for the open. Let's go. What we got? Let's see those. I want to see what happens here. I'm excited. So we got Dow sitting at 0.29, S&P 0.4, NASDAQ 0.71. What's a headline other than the nonsense we've already looked at? Central banks inflation bets come due in 2022. Yep, we'll see what happens this year. Gonna be fun. Oh, this is so ridiculous. Are you serious? Come on, dude, get over it. Boris Johnson apologizes, admits he attended party during lockdown. Okay, get over it. People are human. America's electric vehicle selection's about to get wider. Don't matter. Let's see here. China's crackdown leaves the world's biggest gaming hub at the risk. Operators in Macau. It's probably why Wynn has been somewhat suffering as well. No, I know people are really upset over the whole Boris Johnson thing. I get it. You got especially since you had the one lady. Jeez, are we live yet? This is off the record, right? Talking about basically how much alcohol they were having at their parties. It's and then resigns afterwards. But it's just, look, I mean, the pandemic's worn on everyone. That's not to say you shouldn't follow your own rules, and there's so much hypocrisy in government. But at this point, it's just an eye roller. It's just like, it's to be expected. There was I don't know if we could find it. The rules are for thee, not for me. That's what I'm saying. You see that all the time. It's just like, it's an eye roller for me at this point. Let me see here. Where is it? Mask off camera. Let me see if I can find. I don't think I can. No, darn it. There's basically a clip where somebody at the Justice Department goes up to give a presentation, and they walk up to the room, but they're not up, at front and center yet. They walk up without their mask on. They put their mask on, walk 2 feet up to the podium, or maybe 10 feet up to the podium, and then take their mask off, implying they've been wearing it the whole time. It's such a fraud. Like it's this. Everybody's like, all of the government officials. They're just all eye rollers. It's kind of like, I tweeted yesterday that Bernie Sanders. You should follow me on Twitter if you don't yet. What did I tweet yesterday? I tweeted yesterday that Bernie Sanders just introduced a bill to distribute N95 masks to Americans. This is smart, just 2 years late. Classic fail. I mean, if you think about it, it's like, come on, man. Like, why didn't we do the mask 2 freaking years ago? Come on, man. It's ridiculous. Now you talk about masks? You couldn't use the Defense Production Act for masks back then? When people who, like, especially frontline workers, can't afford higher quality masks or can't even get them? It's just ridiculous. It really is. Anyway, all right. So let's get to the bell. We got 20 seconds to go. Just tired of the politicians' nonsense taking up space on the top of Bloomberg. Let's talk about money. All right, here we go.
Very smart guy. You've got a founder and CEO who controls the company. Mr. Zuckerberg controls Meta.
I think that when you have a founder who's wealthy, he can say, you know what, I don't think that's a good idea for small business. I don't think that's helpful. That's why. There. What do you, like your phone? Yeah, like I'm in the middle of a soliloquy. To be or not to be, who are you texting?
I'm not telling you.
Yeah, so that looks like about 75-ish% green, I'd say. We'll see how things move now. Very, very curious to see how we're going to move now that the market's open, enough liquidity for institutions to actually start trading. You've got Tesla at 1.5. You got ADA about off of some of its recent highs here, 128. Okay, Cloudflare up 4.6%. Nice recovery there on Cloudflare. Upstart coming off $100. That's 20% had you bought it at the bottom. Affirm seems to be moving. Neo pulling down. And that's Neo again. Come on, Affirm pulling up. And Tesla moving up. Alibaba moving up. Palantir seems to be moving. Palantir, where is it? Palantir's moving up 3%. Very nice. Lucid's moving up 2.5%. Bitcoin's going to come back in to test 44 again. Robinhood, nice green candlestick there, up 3%, roughly. Let's look at the downside here. What's falling? Wait, where'd Darden go? Wasn't Darden like way down? Where is it? Darden. Not quite sure what's happening there. Okay, but I don't see it towards the bottom anymore. It must have been just a glitch or something like that. Anyway, not much red. I mean, the worst thing today, folks, is Carvana and DWAC, and we're talking about 2% here. This is not bad so far. I mean, I'll take the green over here. Okay, SoFi moving up. Neo's coming back. This is good. This is bullish market right now. Let's see, Matterport. A little stutter there. Ooh, Cloudflare, folks. Here we go. There we go. 122 now. Get into that cybersecurity space. Not bad to see a nice recovery there on Cloudflare. Keep an eye on that. I do think there's an opportunity to snag that under its floor price. Remember, we talked about that. Where's it? I got it at 129 was its floor price. It's sitting at 120 right now. You get a nice rally out of it today. We'll see. I don't know if I'd day trade it, but I don't know how wrong you could go being bullish today on a day trade. It seems like we're just getting started here, but you never know. Yeah, look at that. Look at that Tesla move there. Nice sharp candle to the upside. Nice fill on that candle there, 2.2% end phase. There we go. Okay, the SPY should be moving up based on some of these individuals here. There we go. SPY's moving up. Okay, good. QQQ should be doing the best here. Yep, almost 1% on the NASDAQ. Let's see bonds. This is good. All right, and on the bonds, we are sitting at, again, 1.718, so no real move here. Nice slide on those bond yields, very, very good. And the only place you're not going to see a slide is a slide down in the price of the programs on Building Your Wealth. So your reminder to check out those programs linked down below on Building Your Wealth. You get lifetime access for as long as I freaking feel like it, which is full transparency. I'm probably not going to be 80 sending stock buy sell alerts or doing live streams, but I have no plans to stop anytime soon. No upsells within the programs. I hate that. You buy a program and it's like, oh, if you really want the next thing, you got to get into this or this. None of that garbage. But the price does go up over time. That's the only thing, and I'm very transparent about that. So Sheeb up 10% right now. Polkadot 12%. Does look like BTC might be able to break it with the way tech's moving. We might be able to break 44 here momentarily. We are on our way back over. Here we go with 43,889 right now on our way. End phase trade desk moving nicely here. How's Cloudflare? This pulled back again a little bit. Yeah, didn't want to chase it. And it's certainly not chasing. Neo, Baba continuing, folks. Really nice here. Hut 8 Mining, 5.15. Neo, Robinhood up about just about 4%, slightly below 4%. Matterport 3. Okay, let's go ahead and look at some headlines here. Carvana is softening, though, and it does look like the market overall is happy. Happy market is good after that crazy Monday that we had. Gee whiz. Okay, a little bit of a rotation down here on Tesla. I don't know if that's happening to the broader SPY. It is. Oh, man. You just can't stay consistent here, the market here. Look at that. The NASDAQ just went from being up 0.99 to all of a sudden only being up 0.68 now. So a little bit of a minute candlestick rotation there. Uh-oh, only up 2/3 now. It's all plummeting again. See, easy come, easy go. It's pretty common, though. So we'll come back. This is just classic minute drama. Let's go over to Bloomberg. All right, let's see what you got on Bloomberg here. And mother of all supply chains. Oh, look at this. Okay, this here indicates the world's economy could be headed for the mother of all supply chain stumbles. That's the warning from HSBC economists who caution that if the highly infectious Omicron variant, which is swamping much of the globe economy, spreads across Asia, especially China, then disruption to manufacturing will be inevitable. In which case, if we get that Chinese disruption to manufacturing, you're talking about more inflation. China is the world's biggest trading nation, and its ability to keep its factories humming through the pandemic has been crucial for global supply chains. While the outbreak of Omicron in China is still small compared with the Western peers, authorities are taking no chances. In recent weeks, scattered infections of both Delta and Omicron have already triggered shutdowns to clothing factories and gas deliveries around one of China's biggest seaports, and disruptions at computer chip manufacturers in the lockdown cities, in a lockdown city, and a second citywide lockdown in another province. Okay, whatever. So just indicating more of this drama playing out. I mean, they just tested wasn't it like 14? Was it 4 or 14? I can't remember. Tested millions of individuals just to find like 22 cases. It's crazy. Anyway. So how Democrats could hold the House? Yeah, good luck on that one. Not optimistic about that. Yeah, okay. Anthony Fauci called Senator Marshall a moron in a hot mic moment. Nice. Yeah, that'll get picked up and clipped a lot. Tesla's VP of People passes the baton. Okay. All right, whatever. Let's go hop on over to The Economist and the Financial Times. Let's see what headlines we got over here. So a lot of talk about inflation. No surprise here. Boris Johnson now faces calls to resign. Wow, people are a lot more mad than I thought. Faces calls to resign from MPs. Okay, well, that doesn't bring your own booze gathering during the lockdown of May 2020. Oh my gosh. There's so much drama in politics. Oh, it's so painful. But then again, they did deserve the drama. They bring a lot of it upon themselves. That's kind of like the mayor of San Francisco being caught at, literally just imposes a mask mandate, then gets caught at a party clubbing and dancing without a mask. And she's like, well, I was feeling the spirit. In other words, if you're feeling the spirit, you don't have to follow your own mandate. You know, that's what pisses people off. It's like, if you're gonna have the mandate, you better be following your own rule. All right. Jeez, what a mess. What a freaking mess. All right. What is the time scout for us? I don't know. I don't think some of y'all believe it. Well, I want to go back and see what the indices are doing here. Okay, let's see here. Here we go. Hold Hold on a sec. Let me see if I can find it here. Is this? Here. Look at this really quick. Here, hold on.
Started dancing because I was feeling the spirit, and I wasn't thinking about a mask. I was thinking.
Oh, it gets me every time. Oh my gosh. All right, let's get to the indices. All right, so Spy's dancing. Spy doesn't seem to be feeling the spirit. All right, QQQ. No, QQQ falling a little bit here. That's not going to help BTC pass the test. Sitting at about 0.6, no longer at that about 1% where we were, and BTC probably rejected again here. Yep, BTC rotating down with the NASDAQ. You've got Sunrun 3%, Robinhood up about 3 as well. Cloudflare only up about 3-ish right now. Baba doing well, quite well at 4, but also rotating slightly down. Some smaller caps here, or fintechs. Fintechs getting hit a little bit right now. It looks like PayPal. You've got OppFi over here. Shift Tac is down. Lemonade's down. DocuSign's down. Only fractionally here. Roblox is down. So something's definitely inflecting down as maybe the market tries to use this little bit of excitement as an opportunity to just take a little bit more money off the table rather than onto the table. Yeah, a lot of spark lines here rotating down. Again, Roblox, Peloton, Shift, Root, AMC. The upside less enthusiastic than it was, although Open Door just popped about 8%. Do wonder if there's news that broke on Open Door. We'll take a look at that in just a moment. HUD 8, 4%. Cloudflare only at 2.9 now to the upside. And where's Tesla? Where are you? Tesla up about 1.16, also somewhat rotating to the downside. All right, let's see what's going on Open Door. Let's see here. Open. All right, let's see here. Open Door. Reader interest rises. Stock rises 11%. Really? Nothing. There's no news. You got upgraded yesterday. Buy target $15. So what's Open Door now? Isn't that low? Oh, it's at 13. Yeah, but that's not that's old news. That's from yesterday. Well, all right. Crazy. All right. Well, that it is very interesting to see the market rotate and spark. But it's not a surprise. This is just like the MO of this market, folks. Convictionless rallies. How many times have we said that? You get rallies with no conviction. That is, things go up and then they just go right back down. Saw that U-turn hard too. Yeah, look at the NASDAQ here. About half as high as it was. Was at 1% just a few minutes ago. We just watched that bleed right down. RK, same thing here, rotating down. Continuing to sort of sell down. It's still positive. So it's still a green day. But boy, oh boy. It's hard to keep it up. Ay. All right, what else? Let's see here. Tesla. No, we talked about that. Unvaccinated folks in Germany. What? Wait, what? EU warns repeat boosters could weaken immune system? Oh my gosh. What? Oh my gosh. Whoa. This is going to have the anti-vax community go freaking nuts. Look at this. European Union regulators warned that frequent COVID-19 booster shots could adversely affect the immune system. Repeat booster doses every 4 months could eventually weaken the immune system and tire out people, according to European medicines agencies. Instead, countries should leave more time between booster programs and tie them to the onset of the cold season. The advice comes as some countries consider the possibility of offering a second booster shot in a bid to provide further protection. Wow. Boosters can be done once or twice, but it's not something we can think that should be repeated constantly. We need to think about how we can transition from the current pandemic to a state of to a more endemic state. The EU regulator said at the briefing that oral and intravenous antivirals maintain their efficacy against Omicron. The agency said that April is as soon as it would approve a new vaccine, blah, 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 blah. Wow. That's a big one there. Look at that. That's incredible. Yeah, I do think that, ultimately everybody's going to get exposed to Omicron. I will say, okay, I did a video a couple days ago. Very good video. I encourage you to watch it if you haven't seen it yet. And it has to do with the common cold giving you immunity to coronavirus or to COVID. And when I talked about this on Twitter and people didn't see the video, people were like, oh, what does the cold have to do with the coronavirus? Well, common colds are caused by 4 strands of the human coronavirus, which is different from COVID-19, SARS coronavirus. And so what that means is if you had a common cold before you got exposed, or to some degree at some point before you got exposed to COVID, you might actually be asymptomatic or just completely fight off COVID because you had a cold. So in other words, having a cold could be your best defense for COVID, which is crazy. And it reminds me of, I was talking to Lauren about this yesterday, and she's like, because Lauren, Max, my 3-year-old, and Jack, my 6-year-old, they all tested positive for COVID. We expect Omicron. Lauren still has this lingering feeling of kind of having some lingering exhaustion, but otherwise everybody's recovered and fine. And Max was the one who is not vaccinated. And Lauren just told me last night, oh my gosh, Max was sick with a cold 2 weeks before he got COVID. It's like, boom, there you go. Now I know what I'm saying is anecdotal, but it reiterates the study about the common cold. So very interesting. All right, end phase. Look at this, folks. Look at this decline here. I just got an alert on end phase that we just shifted about 3% right here. Really interesting. Let's see here. SPY. Let's look at SPY here. Yeah, very tentative S&P 500. NASDAQ, trying to find a bottom in the day here. Robinhood end phase only up about 0.5% now. If anything, you've got more companies that have sparklined to the downside. DocuSign, Planet 13, Dutch Brothers. You've definitely got a more of a drawdown than a run. And it makes sense. We didn't really deserve a rally with that report we got. Tesla still doing quite well, up about 1.45% on the day. Baba as well at about 4%, but also kind of rotating down. So still fear to be had. Lucid 2.4. Yeah. Okay. Well, we'll see what happens throughout the rest of the day. But the good news is hyperinflation has, at least at the moment, taken a little bit of a back burner. And at this point, the best thing for you to do is go down to the link down below and check out the programs on building your wealth. Ooh, quick note. Shiba Inu Robinhood listing said to come as early February. Ooh. But anyway, yeah. Check out the programs on Building Your Wealth link down below. Use that coupon code before the birthday. It's a big one. It's my 30th birthday. Maybe that means we should do the biggest price increase for the 7% inflation we're seeing here. Anyway, all right. Thanks, folks. Thanks for being here. We'll see